Ever feel like you are running on a financial treadmill, working hard but never quite getting ahead? You are not alone. 17 million people are practically broke by the third week of every single month. I know because I used to be right there with you. I am talking negative balance, overdraft fees, ramen for dinner every night kind of broke. It is a tough spot, and honestly, it is exhausting. But here is the thing, it does not have to be your permanent address. I cracked the code, built a six-figure portfolio before my 30th birthday, and did it all without a tech salary or a lucky crypto gamble. Today, I am not just telling you a story, I am handing you the exact 5-step playbook I followed so you can copy, paste, and win your financial game. This is not about deprivation, it is about strategic freedom. Most people think budgeting means cutting out your morning latte, and sure, that can help. But it is much more powerful to find where your money is actually leaking, often in places you would never expect. Here is how you start. Print out the last 30 days of your bank and credit card transactions. Seriously, print them. Now grab a highlighter and mark every single charge over $30. For each highlighted item, ask yourself one brutally honest question. Would I still buy this if it cost double? Anything that does not get an immediate and enthusiastic yes gets a big slash through it. This is not about shame, it is about awareness. Do this once, just once, and you will uncover habits that are costing you a fortune. On average, people free up $240 a month with this exercise. That is enough to start your emergency fund tonight. Imagine that peace of mind. Let us be real, willpower is unreliable. We start strong, then life happens, and suddenly that disciplined savings plan disappears. Systems, though, are gold. Here is one that works. Open a second checking account and give it a secret nickname like out of sight, out of mind. The same day your paycheck hits your main account, set up an automatic transfer to move 20% into that second account. Then, the next day, have that money move again into a high-yield savings account. Look for accounts paying 4.5% or more instead of the nearly 0% most big banks offer. You cannot spend what you never see, and that insured interest beats letting your cash sit idle. This is not just saving, it is building a financial fortress, brick by automated brick. Credit card companies are not your friends when it comes to minimum payments. They love them because they can stretch a $5,000 balance over 23 years, draining you for thousands in interest. That is a financial vampire sucking your wealth dry, and it is time to stake it. List every credit card you have with its balance and annual percentage rate. Attack the highest rate first with every extra dollar you can while still making minimum payments on the others. This method, called the debt avalanche, is incredibly effective. The average household saves about $3,800 in interest this way, and your credit score can jump 30 points within a year once your utilization drops below 10%. This is not just about paying debt. It is about reclaiming your financial power. If your job offers a 401k match and you are not taking full advantage, you are handing your boss a raise while refusing your own. It is literally free money waiting for you. Contribute enough to capture that entire match higher. Do not leave a single penny behind. Once that is done, open a Roth IRA and max it out by contributing the current annual limit of $6,500. Why a Roth? Because your money grows tax-free and you withdraw it tax-free in retirement. A 25-year-old investing $125 a week into total market index funds, earning around 10% annually, can realistically reach $1.2 million by age 60. That is the magic of compound interest and starting early, a true financial superpower. Life happens, tires blow, roofs leak, jobs change. When it does, the last thing you want is to fall back on high interest debt. That is why you need a three-tier safety net. Tier 1, $1,000 in a separate savings account for real emergencies, like a flat tire, not concert tickets. Tier 2, 3 to 6 months of bare-bones living expenses stored in a money market fund. It should be accessible within 48 hours and provide a buffer for bigger surprises. Tier 3, unused credit lines or low-interest personal loan, pre-approvals for those once-in-a-decade hits like job loss or medical bills. Build these 3 tiers and you will never again be forced into a corner when life strikes. It is about resilience, not just savings. So there you have it. Audit your spending, automate your savings, eliminate debt, grab your free money, and build your safety net. That is the full playbook. 5 actionable steps. Do them consistently for 3 years, and you will wake up with a deep sense of control instead of anxiety. You will have freedom, options, and a future you are actively shaping. If this brought clarity or value to your financial journey, subscribe and stick around. The next video covers how to turn your side hustle into an extra $1,000 a month. Your future self is already thanking you.